This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 6/10/22, show number 397. And the CPI print came out today, Nick, and you and I, of course, are not surprised, but the market just is having a meltdown.
Yeah, the market's having a fit over it today, and the report was released earlier at 8:30 a.m., and it came in, I believe, at 8.6% for the month of May. This was the highest increase since December 1981. The number was also above expectations by a little bit, and the markets are reacting with a sharp sell-off today. Honestly, I don't know why the market is so freaked out about it. Even yesterday afternoon, the market sold off in anticipation that the number would be on the high side. And even the Biden administration told us early in the week, expect a high number. So I don't know why anybody's really shocked over this number. It's high across the board. Everything out there right now is expensive. We know it. People know it. And this report was really just confirming what we all knew. So again, we'll just see how this market plays out today. But you have the Dow down 700 points, NASDAQ Composites down 360 points, and the S&P 500 is down about 98 points as we speak. So it's a very, very ugly day out here, to say the least.
Hey, and if you've gone to the gas station, if you've been to the supermarket, you know that inflation's far worse than what they're admitting to. And basically everything's falling, although gold seems to have leveled off a bit.
Yeah, gold was down earlier this morning with everything. But, now gold is actually flat on the day. So really good comeback for gold. And honestly, the Fed has to raise rates. Generally, when the Fed is this far behind the curve, gold won't do so well because higher rates usually hurt gold. A stronger dollar usually hurts gold. But that's not the case today. Gold has really come back with a vengeance here. And that's a strong move, at least right now, off the lows of the day.
And, now you're going to start seeing loans getting made that weren't otherwise before, because that's when the banks start the commercial credit creation when interest rates start going up. So it's actually a bullish case for gold. And as we're speaking on the spot market, at least, gold has gone green. It's up 10 cents, but compared to 750 point loss on the Dow, it's doing real good.
Yeah, it seems to be doing very good today. In fact, I think it's probably one of the better performers in this market today. So gold is looking pretty strong. And you know what else is actually doing well is gold miners. Gold miners are having a very good day as well. They started out very weak at the open, and they are now nicely positive, up almost 2% on the session.
Yeah, even silver on the spot's up, and nickel, and that's been moribund.
That's right. Silver has also made a nice little move here.
Yeah, one thing I wanted to address, the Treasury, the 2-year Treasury is up to 2.95%. It's real close to that 3%, which has got to be sending off alarm bells all over the world.
Yeah, that's definitely, anybody that's been in this business for any length of time should know that the Fed funds rate really needs to be tracking the 2-year Treasury note yield. Yields on the 2-year Treasury are at 2.968% this morning, up 15 basis points. That's quite a move just in a single session. And right now, the Fed funds rate is not even at 1% yet. They're going to raise another 50 basis points on this coming Wednesday. That'll be the next meeting. I guess the market is looking forward to that. But this 2-year note yield is really on the move. And, the Fed still has work to do. They're behind the curve right now, and they got to get going before reaching that number.
Hey, and next week is Quad Witch.
That's right. It's that time of the month again. That time of the season, I should say, because Quad Witch comes around once every quarter. And we are going into the June options expiration, which is where you're going to have 4 different asset classes expire under the sun next week. And that usually makes for a lot of whipsaw and sometimes a lot of volatility. also expect a ton of institutional game playing with many of the popular stocks. I'll give you an example of that. Yesterday was a popular semiconductor, NXPI semiconductor, had a rumor that Samsung was going to buy them. So the stock spiked up. Later on, it fell back down. So expect a lot of rumors, a lot of ridiculous upgrades and downgrades. That's generally what we're going to see during an options expiration week. Just a lot of institutional game playing. So it should make for a pretty interesting session Monday through Friday with the Fed and then Options X.
All right. Hey, one stock I wanted to discuss, Tesla. So it's been very volatile lately, going up and down over 700. Right now it's trading just below 700. What is that chart looking like to you,
Well,
Nick?
Tesla, believe it or not, still has a fair amount of support right where it is. Today it's trading just around or shy of that 700 level by a point, right around 698, 699. But I still think there's a fair amount of support here for Tesla at the moment. Now, if you take out the recent low, which was made about 3 weeks ago at 620, then the stock could go into a free fall like everything else. But right now, Tesla still lives to fight another day. Obviously, you know, the Elon Musk Twitter battle really moves the stock on a day-to-day basis. Is he going to own it? Is he backing away? Is he going to pay the $1 billion walk-away fee? There's just so much going on. It's a very, very good soap opera to watch as you go forward here. But that's really causing, I think, more volatility than ever in Tesla at the moment. And then you add on the normal market condition volatility. I mean, it's just making for a stock that's sitting in the ocean during a hurricane. You know, it's all over the map.
Yeah, even aircraft carriers got to leave port during a major storm, right?
That's right. That's right. And we are looking at, you know, some really choppy waters here going forward.
Hey, and Twitter, so right now it's at $39. It hasn't, I mean, obviously it's well below his offering price. What's the final price? $44.20? He's got to get that 420 in there, you know?
It's really, really hard to say. Honestly, when I look at the Twitter chart, the pattern has fallen apart a little bit. So I wouldn't rule out that, you know, maybe he'll pay that. But, you know, what I think the value is around $32.50. And I think that's the real value of the stock according to the chart right now. I mean, that's where I see the major support. I'm not sure how much of a premium he's going to pay. I don't think he would mind paying up for this stock in a good market, but we are in a horrible market.
Anything but a good market now.
Yes, right. This is, you know, we are in a collapsing market. We're in a high volatility market. And, you know, the policies that are going forward by this administration are not telling us things are going to improve anytime soon. So I don't blame him. I would actually not pay more than $32.50.
All right. Hey, I can see your point there. And it's just quite entertaining to watch for sure. And Bitcoin, of course, under 30,000. Again, it keeps bouncing up and down 30,000.
Yeah, now today we're looking at Bitcoin, you know, just under 30,000 at 29,600, 29,600 that is. Right now, the pattern is still holding up for Bitcoin. It's still in that choppy consolidation that could still make a minor zigzag up that hasn't broken. But traders have to remember that this stock is in a bigger chart downtrend. And if it loses that consolidation pattern, this thing is going to go by the wayside pretty quickly. So you want to be a little bit careful with it, but it lives to fight another day at the moment. But as soon as I do see that pattern break, I will let everybody on here know about it.
All right. And we've been talking a lot about nat gas lately. It's come down a little bit, but still over $9.
Yeah, today nat gas is actually at around 864. So it's just under 9, but the pattern is still fine. Nat gas is overbought. It's extended on, you know, the bigger time frames, and they just don't go up in a straight line. So nat gas has pulled back a little bit today. You even see oil pulling back a little bit today. Overall, it's hard to see. Yeah, these are just overbought conditions, and that's what happens when you get extended. So you're going to do some backing and filling, but the trend is still up. And, you know, I don't see the chart being that problematic. If there's a major slowdown in the world, which could happen, then I think, maybe the energies will get hit harder. But today looks like, some natural backing and filling and a little bit of selling pressure. But I don't think it's much more than that.
Okay, well, I'm going to go out on a limb here. I'm going to make a call that electric rates within the next 18 months, Nick, are going to double.
Well, I got to tell you, I think they already have started that move. So I think electric bills have gone up already. We've seen them up, I don't know, 30% already. So, I would not rule out a double. I just think we're on a trajectory where nothing is really that good going forward and only looks to be getting worse. So, you get these technical bounces, but, the trend is down now, and we're in a bear market, and that's the bottom line.
All right. And I'm going to give you a little insight here into fundamentals. Back 20, 30 years ago, natural gas contracts with utilities, their duration was 10 years or even more. Today, they are typically less than 3 years. And there's a reason why that we don't need to get into why they've shifted to short-term contracts. It's got a lot to do with restructuring and also the fact that nat gas prices hit these all-time lows. So the utilities thought they were being smart. They didn't want to get roped into higher contracts at higher prices when they could just be buying on the spot for next to nothing. But now we're seeing something that's totally unknown to the electrical industry, which means that historically it reacted to higher energy prices gradually over time as these contracts expired, and it gave them time, if it was just a temporary blip, for prices to come back down. Now, though, we're going to see way higher prices. That's just gas. Coal, also, same thing. Long-term supply contracts becoming short-term.
Well, I have to say that doesn't amaze me at all. It doesn't just surprise me, I should say, because we see every time people take their hedge off, it goes the opposite way. It never fails. Nothing lasts forever. Everybody is always complacent. And when people get complacent, that's when the moves take place. So I'm not shocked by what you said. And I just find it, more confirming, that why you got to be a contrarian in this business every step of the way, because just that statement, once these guys took off their hedge and they were, looking to buy low on the spot price, that's when it all turned around. And, not a shocker there at all. Earlier today, I heard Biden's National Economic Councilman Brian Deese was on a CNBC interview, and he was talking about how, natural gas exports to Europe are up 20%. And I'm thinking like, yeah, that's great. You're sending all this, gas to Europe. What about over here to your own country?
Yeah.
You can't make this stuff up. It's just so crazy. We're living in a bizarro world. If you ever saw that Seinfeld episode, we are living in that episode right now. And it just amazes me how this guy is touting all the gas that they're sending to Europe. And, right over here, we are, looking at the all-time high gasoline price.
Yeah. Hey, all-time high gasoline price, coal contracts, it's the same exact situation as nat gas contracts, the duration with utilities, because they've been anxious to phase these plants out. So they don't know how much coal they're going to need. And as a result, they're going out shorter on the contracts. Price of coal way up, going higher. So you take all these things into consideration. Electric rates, utility rates are going to be double, probably in less than 18 months, but I'll give it 18 months for some of those other some of those other ones, Well,
you got to remember, that the next election's not for the presidency, is not till 2024. So, I mean, what can really change between here and there? I mean, not all that much. So, again, it really is amazing to see, but, we are definitely headed down the wrong path very, very quickly.
All right. Well, we'll leave it at that. Make sure you go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Send all your emails to kl@kerrylutz.com. Nick, we'll talk to you on Monday. We'll see how this carnage concludes for today.
Yes, we'll see. Have a great weekend, Kerry.